Friday, May 1st, 2020, Maneco 64, home of alternative economics and contrarian views. This morning, I want to talk about whether there's enough gold for it to be the super sovereign currency of the world. And the reason why I'm talking about that is that a few days ago, the Shanghai Gold Exchange boss in China said that he wanted a super sovereign currency for post-crisis time. And it's a big fallacy. I have a lot of people asking me this question, whether there's enough gold for it to be money. And I think it's been pushed upon people's psyche by the Keynesians, because the Keynesians hate gold, of course, because gold disciplines politicians, it disciplines the state, it disciplines government, of course. Yeah, it's an anchor on unlimited money printing for the bankers as well. So there's always this question, is there enough gold? And that's what I want to go over today. I think it's a Keynesian mainstream fallacy that there isn't enough gold out there for it to be money. And it's weird because you just need to go back to JP Morgan when he was at a hearing in Congress. I think it was 1912 or 13. And they asked him what gold was. And he said, it's money. Everything else is credit. And you might argue, well, the world has grown a lot since 1913. Well, so have gold supplies. So this is what the Chinese guy from the Shanghai Gold Exchange said. His name is Wang. Wang said the concept was still older. Indeed, gold, one of the most ancient forms of money, falls into the category, but its supply is finite, limiting any role it can have in global trade. That's completely a fallacy, Mr. Wang, and we're going to go over through this. So, first of all, gold is a yardstick of value. So, just like you have a 1 yard to measure distance, it doesn't mean to say that there aren't enough yards in the world to measure 10,000 yards. You just have to adjust the scale. You just change the ratio. Same thing with weight, a pound. It doesn't mean you can't weigh the refrigerator Perry, that football player, right? You can adjust the scale. Same thing with the kilo. And same thing with the ounce or gram of gold. All you have to adjust is the ratio. Gold is in the middle, and everything around it revolves around gold because it's the yardstick of value. So it all depends on the supply and demand of gold and the other commodity or service. It's not hard to understand. If we thought that there wasn't enough gold in the world to measure value, then we should also think we could measure anything that's more than maybe 10 yards. You couldn't measure a golf hole that's 670 yards. Oh, there's not enough yards. That's the most basic way to disprove this. It all depends at what rate you measure everything else and other countries' currencies versus the ounce or the gram of gold, right? So now I'd like to touch upon the supply. He says it's finite. Well, it's not finite. I was thinking of doing this video a few days ago, and I didn't. So I left it for today. And I've seen that Bellin P, who I interviewed a few weeks ago, he's just done a video overnight, Gold, the Truth Hidden in Plain Sight, Part 1. I recommend you watch that video. And he touched upon a lot of the things that will help me explain to you why there is enough gold, why it's not finite. So some of the numbers he came up with, and he took this from the World Gold Council. So the average mine production every year of gold is 2,893 metric tons. So Mr. Wang, it's not finite. There's 1,413 metric tons of recycling. What does that mean? Well, that's people probably selling their jewelry. So we've got over 4,000 tons of supply every year. Of course, only 2,893 are new supplies. They're mined from the ground, of course. The other interesting statistic he looked at is that the M2 money supply in the US, that's at $17 trillion right now. And he looked at the total gold supply of the world, not the US's gold reserves. That is 190,000 tons, which at $1,700 is $10.4 trillion. So there you go. That puts things a little bit into perspective for you. The other thing that's very interesting about gold, and one of the reasons why the price of gold is very stable over the years. Yes, it might go up and down daily with the bullion banks manipulating the price, but over the decades, centuries, millennia, gold keeps a very stable store of value. And the reason for that is that the stock to flow ratio is very high. What does that mean? Well, if you take the 190,000 metric tons that's out there since the beginning of gold mining, or since when people started finding gold, divided by the new supply every year, 2,893, you get the number 66. So that means that there's 66 times more gold than is produced or mined every year already. So with other commodities, the stock to flow ratio is very low because they're consumed. So the price is susceptible to a lot of volatility. So that's another reason why gold is money. The stock to flow ratio is very high. But it's not finite. There's a 1.5% increase per annum in the supply of gold. If you take the 2,893, that's 1.5% of the 190,000. That might change slightly up or down, of course. So it is not finite, Mr. Wang. The other interesting point I like to make is a little bit about the qualities of gold, facts and features of gold. This is from this website here, gold characteristics. Just a little bit of fun for you to understand how special gold is. So it says over 90 elements are found in the Earth's crust, but for millennia, humans have hunted, hoarded, and battled over one in particular, the honey-colored metal gold. The art of goldsmithing began some 6,000 years ago during the Stone Age, and our fascination with this metal continues unabated to this day. In the 5th century BC, Pindar summarized our relationship with gold when he described it as a child of Zeus, neither moth or rust devoureth it, but the mind of man is devoured by this supreme possession. The term gold comes from the Old English word for yellow, jello. Gold is prized for its relative rarity. It comprises 0.000005% of the Earth's crust. The chemical symbol for gold is Au, which is short for aurum, the Latin word for gold. This is an interesting part here. Not that the other ones weren't. Gold is the most malleable and ductile metal, characteristics that make it extremely easy to work. An ounce of pure gold can be rolled into 100 square foot, 9.3 square meter sheets, only 5/millionths of an inch thick, and it can be drawn into a wire that is 50 miles or 80 kilometers long. Gold readily forms alloys with other metals. This characteristic is important for jewelry making for 3 reasons. Gold alloys have distinctive colors. They cost less than pure gold. 3, they have greater durability than pure gold. So it also helps mint circulating coins. If you look at the circulating coins in the past, they're not 999 gold or pure gold. They have to have some copper with it, or else they'd wear out very quickly. It would damage very easily because it's very soft, pure gold. Gold is a chemically inactive metal that does not rust, tarnish, or decay. Gold coins retrieved from shipwrecks emerge as shiny as the day they were minted, despite resting on the seafloor for centuries. Gold also resists acid, though it does dissolve in aqua regia, a chemical mixture used to test the fineness of gold. Gold is also exceptionally heavy. A cubic foot of pure gold weighs upwards of 1,200 pounds. Gold is a highly efficient reflector of light and heat, as well as an excellent conductor of heat and electricity. These properties make it a valuable industrial tool, particularly in the electronics and aerospace industries. I'd like to touch upon technology as well, because I've been working or associated with a company called GlintPay. They contacted me over a year and a half ago, maybe even 2 years, about talking about their product. Basically, they have an app where you can store gold, where you can store fiat currency, and you get a MasterCard, and you can spend whatever currency you want, be it gold, pounds, euros, or dollars. The gold is stored, of course, in Switzerland, in your name, in an allocated Brinks vault. And what does this have to do with gold being money, or if there's enough gold out there? Well, because it can also be currency, in my opinion now, because with Glint, you can spend as little as a penny, a UK penny, or even a US penny. I did the experiment here in the UK with my Glint app. And as you can see here, I bought 1 penny's worth of gold, and that added 0.002 grams of gold to my account. So you can even spend a penny of gold now with Glint. Of course, you can do a bit more, like I did a few days ago, 300 pounds. I bought 6.5977 grams of gold. So there isn't any really excuse for gold not to be at the center of the monetary system anymore. And there isn't even an excuse for gold not to be like a circulating currency. Yeah, many of you think gold should be held physically, but we need to draw a line between trust. Of course, there's a lot of things in this world, especially in the monetary world, that are not great right now. But I think after the coming crisis, and I think there will be a crisis very soon, trust and confidence will have to be rebuilt, and or else we can't survive as a modern industrial advanced society with indirect exchange. We'll have to go back to a Mad Max kind of world. So here's how Glint works. You can have a quick look here in the video. You can pause the video. I'm not going to go through all the sections here. And if you're interested in the Glint app, if you want to open an account, make sure you use my referral code MarioGlint79. So there you go. No excuse either for gold not being a currency anymore. And I think silver has a place in this as well. Glint hasn't provided a silver service yet, but I think they will in the future. So there you go. Yeah, great fallacy, not only from Mr. Wang. Before I look at the markets, I'd like to disprove even more this fallacy and look back at when there were major wars. And I'll take the Napoleonic Wars, for example. Here in the UK, what happens, or what used to happen in times of war, is that they used to restrict, or they used to stop the convertibility of the paper currency, and that meant that they stopped the gold system, or the gold standard. You had to accept banknotes, and you couldn't redeem them for gold because they had to finance the war. But historically, every time that happened, after the end of the war, it would go back to normal. They would, how can I say, reinstall an honest, sound money system. Governments and states would pay back their debt over time. So let's have a look at what happened in the UK. So they restricted convertibility, so it meant you're on a pure fiat currency system until 1821, a few years after the end of the Napoleonic Wars. So this is what happened to the UK national debt during the Napoleonic Wars. It went up quite sharply, as you can see there, and it topped almost at 850 million pounds, which doesn't sound much today, does it? But as you can see, in 1821, they reinstated the gold standard, and that debt, the discipline of gold, helped lower the debt load to under 600 million by the beginning of the 20th century. So that's what they used to do. But what happened in World War I is that they created a huge amount of debt to pay for that war. They suspended the gold standard in 1914. All the warring powers. Yes, Churchill tried to get back on the gold standard in 1925 when he was chancellor, but he did it at the wrong rate. He didn't account for all the debt that the UK had incurred under a paper system, and that's why it didn't work. So it wasn't the fault of gold. Just to give you an example, what happened during World War I. Just before it started, the debt was at 650 million pounds, the national debt. And after the war, it had increased to over 2 billion pounds. So you had to readjust the price or the ratio of gold to the government debt, to the Bank of England note, to a higher rate, and Churchill didn't do that, and that's why it didn't work. It wasn't because there wasn't enough gold. Mr. Churchill was a politician. He didn't understand that gold is actually a yardstick of value, and that it's in the middle. It's not the paper money that's in the middle. So there you go. There is enough gold in the world. Don't believe the Keynesians and the propaganda. So hopefully that helped you understand why there is enough gold out there for gold to be at the center of the world monetary system, to be a neutral money, not dependent on the whims of politicians and bankers. It's real money, and it has been, as you've seen, for thousands of years. To finish off, let's look at these markets this morning. Precious metals are still under pressure, or the dollar, the paper dollar, it has been rising. And so have some other fiat currencies versus gold and silver. But for me, nothing changes. It just makes it easier for me, or it would make it easier for you to exchange paper money for real money. And why do I think I should keep doing that? Well, if you look at how much debt, which is paper money, is being created. Gold, as you saw, we can only create new gold at a rate of 1.5% per annum. Paper money, they're doing that every day, 1.5%. That should raise alarm bells for you. So right now we've got spot gold at $16.72. That's down $12. Silver's at $14.80, down 17. The Dow future is down 450 points, 23,878. So we're back below that 24,000 level. It's down almost 2%. S&P 500 is down 2%, 2848. NASDAQ 100 future is down 2.6%, or 235 points. Sterling or cable is down 1/3% at 125.50. The euro is up 0.1% at 109.65. And the dollar is down 0.2% against the yen at 106.93. WTI crude back to $20 now. It's at $20 exactly, up about 25 cents. It has been as high as 21.55. It seems weird that the stock market now is going down and oil is going up, but as we know, these markets are very manipulated. But I think the free market and the public will win at the end of the day. The central bankers cannot control the markets in the very long term. They can in the short term. The 10-year yield is down 2 basis points at 0.6, so fairly steady, that bond market. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to the channel if you haven't yet. And you can also follow me on Twitter and Facebook and all these other platforms you can see here. You can follow me there as well. I wish you all a great day. Take care. Bye.